Hello and welcome again to Money Talks, and a very warm welcome to Ed Shing of the Opportunity Idle Investor Fund and your forthcoming book, The Idle Investor,
Indeed,
Ed, which
George,
we're looking forward to. I'm
Thank
looking
you.
forward to my signed
copy.
Indeed, my free perk for doing Money Talks with you. Now, I need to congratulate you because you backed BP a few months ago and we're up 10% on BP, but with the oil industry in general, apparently when the oil price drops, as it has now, the industry starts merging with each other. Is that what's going on? We've seen Royal Dutch Shell, or Shell for short, swallow up that big lump of BG Group. What's going on?
You're exactly right, George, and this is what we saw in the late 90s. When the oil price collapsed to $10 a barrel, we saw a flurry of mergers, BP with Amoco, Exxon with Mobil, Chevron with Texaco. You could argue that Shell BG is just the first of many such mergers and takeovers in the industry. And what's interesting, George, is that the big companies like Shell have fallen a lot less during this recent fall in oil price than the smaller companies. And that's the opportunity. You get these low valuations in the smaller companies. BG was a big company but had its problems, and therefore the share price has suffered a lot more than Shell's, which gave Shell the value opportunity. And I think there are others like that.
I see. But Shell now is a mega company. The economies of scale that must come to bear there, isn't it sort of nearly 8% of the overall FTSE 100 index or something?
It is nearly 8%. And in fact, if you look at the dividends to be paid by FTSE 100 companies, it's 10%. Just that one company, Shell BG, is going to be enormous.
So it's going to be included in all the tracker funds.
Oh God, yeah. I mean, they
isn't it?
have no choice but to have even more Shell than they do now, basically.
Yeah, yes, absolutely. So it speaks for an enormous part of the economy of our stock exchange, doesn't it?
It does, but from my point of view, I would like to diversify, because I think having that much money in one stock is actually a bit dangerous.
So who else should we be looking at as stocks that may be being lined up in the oil industry for acquisition?
Well, you've named BP. BP is a huge company, but it could be bought out by its US rivals, ExxonMobil or Chevron Texaco, which are both much bigger still than BP. Secondly, if you looked at a mid-size oil exploration companies in the UK, you have Tullow Oil and Premier Oil, both of which look quite attractive. Share prices have suffered a lot since late last year and actually look pretty cheap. If you look at the reserves in the ground compared to the value, there is a lot to be had.
Are any competition issues? Would the authorities intervene and go, no, this is too big, it's reducing competition?
No, I don't think so. I don't think so, because oil is a global industry. It's not a UK-specific thing.
Yes,
and the little smaller company I might recommend would be in the North Sea. Because why do I like the North Sea? Because they've cut the taxes on the North Sea oil, and secondly, because there's no geopolitical worries. Nothing's going to happen tomorrow. Ithaca Energy would be the one that I would look at there.
You mentioned the global implications there. What's happening in the rest of the world? Far Eastern stock markets are doing very well, aren't they?
They are going crazy, George. I mean, if you look at China or Hong Kong is up 17% in the last 4 weeks alone, and the Shanghai Composite's up something like 27% over the last few weeks, going absolutely crackers. Chinese retail investors are piling in, and they're actually borrowing money to pile in, which for me is a little bit worrying. When I start to see people borrowing money to buy the stock market, that worries me a little bit.
Okay, and do we fancy Russia?
I work for a Russian company. I find it difficult to like Russia. I know the ruble is appreciated a lot, but when you look at the Russian economy, you look at the geopolitics, it's all still very dodgy.
And here in the UK, in the run-up to the election, is the pound sterling stuffed?
I wouldn't say stuffed, but it's certainly weakening. I mean, if you look at it against the dollar, it's down to $1.46, which is the lowest it's been for quite a while. So I think there is definitely some pre-general election worries being built into sterling and also into the stock market. Yes, the FTSE 100 is up since the beginning of the year, 7.5%, but the Euro stocks, the rest of Europe's up 13 and a bit %. So we are trailing by quite some margin.
Well, we don't hear much about that in the manifestos at the moment.
No, of course not.
But thank you very much, Ed. Clearly a lot going on this global basis in the global oil industry, lots of opportunities for investment there, and indeed in the Far East. So we'll keep our eye on that. Thanks very much, Ed, for joining us today, and we look forward to seeing you again. And thank you for watching.